Hey everyone, Tesla's sales are already falling, and now Nio plans to launch a direct competitor to Tesla in China. So I'm going to share with you the details here and what it could mean for both Nio and Tesla shareholders. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so Nio launching its lower priced Envo brand, a family-sized SUV aimed at Tesla. Let's take a look here. Co-founder, chairman, CEO saying that the current plan, when we started to launch and deliver the first product in September this year, they're going to open up around 100 stores in China. The first product is going to be the L6. It'll be directly competing with Model Y, Tesla. Directly competing with Model Y. And then next year, we're going to introduce the second product, a mid-size, larger SUV for bigger families. So we will not have many products in this offering. We will be focusing on enhancing the market share and also the sales volume of each product in their respective segment. So not only are they introducing this new model, which is a direct competitor to Tesla, the Model Y, but they're also going to really focus on enhancing the market share of this product. They're going to put their energy and focus behind this product. It's not going to be one of many that they're going to launch on this brand. So already Tesla was having difficulty with growth. In fact, it was decreasing due to this increasing competition. And now this is yet another product aimed in the market competing against Tesla. Of course, in the most recent quarter, let me make this smaller so you could see, Tesla's deliveries, Model 3 and Model Y deliveries, were down 10% year over year. 369.783 thousand vehicles delivered in the latest quarter, and that was down from 412,000 in the same quarter the prior year. So September is still a few months away, so it's not going to impact Tesla's second quarter directly, although indirectly it might. Indirectly it might. Let me explain how. Some customers that are in the market shopping for that mid-sized SUV or small family-size SUV, electric SUV, they might look at this Nio offering and say, should we wait instead of getting that Tesla right now? Should we wait for September for this newer model from Nio? Is that a choice that's attractive? For some, it will be. Undoubtedly, some consumers will say no to Tesla and yes to Nio, and vice versa. Some will say no and yes to Tesla. The car market is an interesting one because it's not based only on the specifications of the car. Here's what I mean by that. Car buyers, and you could think of yourself in this matter, they don't just look at the specifications of the car when they make a purchasing decision. They don't just say, well, what's the 0 to 60 time for this car compared to this one? What's the mileage for this car versus the other one? What's the price per mile that I'm going to end up paying for this car versus this car? What's the weight and, the specific dimensions and specifications of the car? A lot of it is based on taste. A lot of it is just based on taste. People look at a car and they look at the other car and they say, this one looks better than the other one, so I'm going to choose this one. As long as the characteristics are similar and not that far off, the specifications may not make that big of a difference in the decision-making process. Look, taste, appeal, brand might make a bigger decision-making criteria. It all factors in. What I'm trying to say is it's not all specifications. That's why with each new model that comes into the market, it just makes competition that much more fierce because it's just another option that consumers can choose from. And some consumers undoubtedly are going to look at that new product, that new model, and they're going to be attracted to it. They're going to like the way it looks and they're going to choose it and they're going to buy it. And so that takes away from the existing participants in the market. And in the last 2, 3, 4 years, there's been so many newer electric vehicle models coming into the market that competition is off the charts. It's the most competitive market I could think of right now, the electric vehicle market, because so many new models and new companies have come into the market, which was already oversupplied to begin with. The car market overall, not just electric cars, the overall car market was already oversupplied coming into 2020. And then with the popularity of electric vehicles, given the government stimulus and the billions of dollars and trillions of dollars of investment that went in, that just created even more supply. So you've added more supply to an already oversupplied market, and now you're seeing the impacts. You're seeing lower sales for existing participants. You're seeing price competition. You're seeing falling profit margins, and it's been bad news for every participant. And this, again, will just add to that trend. It will be bad news for Tesla because now you've got yet another model coming into the market. Some consumers will choose it, even though it might not be as good as a Tesla Model Y. It might be. For some consumers, they will choose it. They will choose it, and that will make it harder for Tesla to make those sales. And so, interesting developments here from Nio with this new product coming in for September. For Nio, it will likely be a positive because they need wider production in order to reach economies and scale so that they can potentially get to break even on the bottom line. They are still losing significant sums of money on the bottom line. And so they need more sales. Tesla's already profitable. Tesla's already achieved profitability and positive cash flow from operations. They can still be profitable even if they cut prices further. And they can really heat up this competition by cutting prices further and just waiting for these companies, these EV companies that are on a weaker footing, to go out of business. That will take a long time because these companies like Nio and others in the US, they are well capitalized. These companies received billions of dollars in funding because of the electric vehicle frenzy in 2020 and 2021, when investors were just buying these stocks, even though they were losing money on the bottom line, even though sales were not that large. Investors were just so enthusiastic about these electric vehicle companies that they just poured billions and billions of dollars into them. And so it's going to take a while for these companies to lose enough money to throw in the towel. It won't be this year. It won't be next year. It will be a while. Some of the weaker players, you're already seeing them go out of business. But for these larger players like Nio, it's not going to happen, and not anytime soon, I should say. It might happen several years down the road, where if they continue to lose significant sums of money, they say, okay, let's give up. There is no hope. But it's not going to happen anytime soon. And with these new products at a lower price point, wider production lowers the cost per unit, and that could potentially bring them to profitability. So this development, undoubtedly bad news for Tesla. For Nio, potentially good news. Potentially, I say, because we don't know the unit economics of this product yet. We need to see it come out. We need to see the sales number, and we need to see how it impacts the margin of the company overall. So potentially good news, but uncertain for now. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.